theory, the market is telling us that the economy will be stronger in 6 to 9 months' time.
And do you think it's going to be? I mean, are investors right?
I think that's right. Even though there's enormous uncertainty around the world, you tend to find bull markets tend to climb a wall of worry. With the new president coming, we'll have a new president in the US next year. With tax cuts, the expectation of lower interest rates in Australia sometime next year, they are positive drivers. Even though the domestic economy, things are very challenging at the moment.
There's a lot of pretty stretched valuations on the market. I'm thinking the likes of CBA and JB Hi-Fi. Where's the money coming from, and can those valuations hold?
There's a lot of passive money in the market, and you'll see, as you mentioned, CommBank, trading at closer to 3 times asset value is a very stretched valuation. One of the interesting things is, and just looking forward, we anticipate one sector that's been hasn't been focused on is that mid and small cap sector, the one that's more focused on the domestic economy. And we think when interest rates start falling, there will definitely be a switch of some of that more passive money to more active and looking for those undervalued growth opportunities in the smaller to mid cap sector.
What's the risk that we're at the top of this run up and there's a sell off coming?
Yeah, I mean that could be definitely the case. I suppose the tough thing from my perspective is being in the market for the last sort of 4.5 decades nearly. You see a lot of pain. I mean, what you do learn is it's not timing of the market, it's time in the market. So even though valuations might be a little stretched at the moment, over the medium long term that you're better off being invested in the market. There's no doubt. There was a big relief rally in the US after the presidential election. Whether it's probably in the short term it's a little overextended, it's probably relative too strongly, and you'd probably expect the market to ease off. The tricky thing is we're coming into that period of the year like the December January rally. So historically the market tends to be a little bit stronger.
So are you expecting a Santa rally this year?
What I wonder is, as probably you pointed out before, maybe we've seen the Santa rally. Maybe we're just getting a little bit early. So this year we mightn't be getting one. What will be the catalyst? What's the catalyst? For the market to keep going higher? We probably need US interest rate cuts. US further interest rate cuts and a drop in tax rate over there. Because obviously in America you've got the biggest global consumer, and in Australia to push the market higher we probably need really some more solid grounds in terms of expectations of interest rates falling.
When it comes to US interest rate cuts and the hope for more, the market is still pricing in a December cut, but we did see inflation again hotter than expected. What's the risk we won't get as many rate cuts in the US as was hoped, and inflation becomes a theme again for the market?
Yeah, I don't think we'll have a significant increase in inflation in the US, but there's no doubt that the expectation of, say, 3 or 4 interest rate cuts in the US next calendar year mightn't be delivered because with what Trump's proposing, with the various increase in tariffs and also the corporate the dropping of the tax rate, the corporate tax rate, they will be inflationary.
Bitcoin is up 37% since the US election less than a month ago. What's your view of cryptocurrency? A place to invest?
Yeah, unfortunately, crypto is out of my skill base. I like buying shares in companies that actually make money and pay dividends. So a view on crypto, that's not my area of expertise.
Well, as you say, your area of expertise is the market. You've been in it for about 44 years directly. Is there a playbook for investors here? Can they get in front of the Trump presidency?
No, I actually think the opportunity to get in front of the Trump presidency was before the before the election occurred. We've already seen a very strong Trump rally. The first year of a presidential election cycle can be a challenging year, where the last year tends to be the more positive year when money's being pumped into the system. There's no doubt in terms of Trump's economic strategy is part of that is cutting the corporate tax rate. So obviously any drop in the corporate tax rate significantly increases profitability for corporates, so would correspondingly increase valuations for those companies. So over the 12-month period, you'd be positive on the next 12 months. The headwinds are more on additional tariffs, higher interest rates, and because of higher inflation.
Geoff Wilson, thank you so much for your time.
Thank you, Alicia.